Based on the historical data and forecast, Bitcoin has shown a downtrend from October 6, 2025, to October 19, 2025, with support at $106,300 and resistance at $109,600. The RSI indicates oversold conditions on several days, particularly between October 12, 2025, and October 19, 2025, with values below 40. The Bollinger Bands show that the price has been fluctuating within a relatively wide range, nearing the lower band in recent days. Considering the forecast for October 20, 2025, to October 26, 2025, which predicts a continued downward trend, I recommend a short selling strategy. Specifically, I suggest entering a short position at $109,600, the current resistance level. Place a stop-loss order at $106,300, the support level, to limit potential losses. Set a target price at $106,000, slightly below the support level, to secure profits. This strategy combines RSI signals, Bollinger Bands analysis, and support/resistance levels for a calculated risk-reward approach. The predicted downward trend in the forecast further strengthens the rationale for this short selling position. Based on the historical data and forecast, Ethereum has been in a downtrend, with prices fluctuating between a support level of $3,830 and a resistance level of $4,010. The RSI indicator has been consistently below 50, indicating a prevailing bearish sentiment, and has recently dipped into oversold territory, reaching a low of 33.5 on October 13, 2025. The Bollinger Bands show that the price has been trading within a narrowing range, suggesting decreasing volatility. The forecast for the next week projects a continuation of the downtrend, with prices potentially reaching $3,880. Therefore, I recommend a short selling strategy. The entry price should be $3,970, coinciding with the forecast price on October 23, 2025. A stop loss should be placed at $4,050 to protect against a potential upward price reversal. The initial target price should be $3,880, aligning with the forecast low for the week. If the price reaches $3,880, we can consider adjusting the stop loss to break even to protect the initial investment and potentially allow for further gains if the downtrend continues. A secondary target price can be set at the support level of $3,830 for a more aggressive profit-taking strategy. This combined strategy leverages the RSI oversold signal, Bollinger Bands contraction, and bearish forecast to maximize potential returns while minimizing risk. Based on the historical data and forecast, BNB has shown volatility, with support at 1070 and resistance at 1300. The RSI fluctuating between 46.0 and 79.4 suggests periods of both oversold and overbought conditions. The Bollinger Bands indicate periods of expansion and contraction, reflecting the price volatility. Considering the current RSI of 75.0, which is approaching the overbought level of 80, and the forecast predicting a price decrease to 1130, I recommend a short position. The entry price should be 1170, placing the stop loss at 1200 to protect against a potential upward reversal. The initial target price is 1130, aligning with the forecast and the lower Bollinger Band. To refine the strategy, we can implement a dynamic target price adjustment based on the RSI and Bollinger Bands. If the price reaches 1130 and the RSI falls below 50, indicating an oversold condition, we can consider covering the short position. Conversely, if the price approaches the support level of 1070 and the lower Bollinger Band, we can re-evaluate the position and potentially adjust the stop loss lower. This adaptive approach allows us to capitalize on short-term downward trends while mitigating risk by adjusting the stop loss and target prices based on real-time market conditions. Based on the historical data and forecast, XRP shows a downtrend with consistently low RSI values below 37, indicating it's frequently oversold. The forecast for the next week predicts continued downward pressure, with prices ranging from $2.31 to $2.39. Considering the support price of $2.29 and the RSI consistently below 37, I recommend a long position strategy when the RSI reaches below 20. Specifically, when the price reaches $2.23 on October 26, 2025, enter a long position with a stop loss at $2.18 and a target price of $2.5. This strategy capitalizes on potential rebounds from the oversold condition near the support level, aiming for a 10% gain. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band suggests a strong bearish momentum. If the price touches the lower Bollinger Band, which is $2.23 on October 26, 2025, it further confirms the oversold condition. Therefore, the entry price remains $2.23, with a stop loss at $2.18 to mitigate risk. The target price is set at $2.5, aligning with the resistance level and providing a reasonable profit margin. This combined RSI and Bollinger Band strategy aims to capture short-term gains from the anticipated bounce after reaching an oversold level. Based on the historical data and forecast, Solana has shown significant volatility, trading between a support price of $182 and a resistance price of $211. The RSI has fluctuated, recently reaching oversold levels below 40, indicating potential for a rebound. The Bollinger Bands suggest that the price is currently approaching the lower band, which could signal a buying opportunity. Combining these indicators, I propose a strategy focused on capitalizing on potential upward momentum. We will initiate a long position when the price touches the support price of $182. The stop loss will be set at $178 to protect against a potential further decline. The initial target price will be $187, aiming to capture a quick profit as the price recovers from the oversold condition. To enhance the strategy, we will implement a trailing stop-loss mechanism. Once the price reaches $187, we will adjust the stop-loss to $182, locking in profits while allowing for further upside potential. If the price continues to rise, we will reevaluate the situation based on the RSI and Bollinger Bands. If the RSI approaches 80, indicating overbought conditions, we will consider taking partial profits and adjusting the target price accordingly. The forecast data for the next week suggests a continued downward trend initially, but with potential for recovery towards the end of the week. Therefore, a cautious approach with tight stop losses is crucial. Based on the historical data and forecast, TRON shows a downtrend with recent signs of stabilization. The RSI has been consistently below 50, indicating a bearish sentiment, with dips below 30 suggesting oversold conditions. The Bollinger Bands show the price fluctuating within a narrowing range, which could indicate a potential trend reversal or consolidation. Considering the support price of $0.309 and the forecast for the next week, I propose a long position strategy focusing on capitalizing on potential short-term bounces. The entry price will be $0.318, coinciding with the first day of the forecast period and a relatively oversold RSI of 35.5. A stop loss will be placed at $0.309, right at the support level, to limit potential losses if the downtrend continues. The initial target price will be $0.324, aligning with the highest forecast price for the week. To refine this strategy, I will incorporate the Bollinger Bands. If the price touches the lower band of $0.304, it signals a strong oversold condition, reinforcing the long entry at $0.318. Conversely, if the price reaches the upper band of $0.354, it suggests a potential overbought condition, prompting a partial profit taking at $0.33 and adjusting the stop loss to break even. This adaptive approach allows for capturing short-term gains while mitigating risks. The portfolio will prioritize this long position with a 60% allocation, recognizing the potential for a rebound, and reserve the remaining 40% for observing market movements and potentially adjusting the strategy based on further developments. This strategy aims to achieve high returns by capitalizing on short-term price fluctuations while incorporating risk management techniques. Based on the historical data and forecast, Dogecoin demonstrates a downtrend, particularly evident in the recent price action and the downward forecast for the next week. The RSI consistently hovers below 50, with dips below 30 indicating oversold conditions. Considering the support price of $0.185 and the forecast prices, a conservative strategy focusing on short-term bounces is recommended. We will implement a strategy based on the RSI, aiming to capitalize on short-term oversold rebounds. Specifically, when the RSI falls below 20, we will enter a long position at $0.184, placing a stop loss at $0.183 to limit potential losses. The target price will be set at $0.194, aiming for a quick profit as the price bounces back. To further refine the strategy, we will incorporate the Bollinger Bands. The price is consistently near the lower band, suggesting potential for a rebound. If the price touches the lower Bollinger Band, we will initiate a long position at $0.185, with a stop loss at $0.183. The target price will be $0.193, aligning with the forecast and the upper Bollinger Band. Combining both RSI and Bollinger Bands, the most efficient portfolio will prioritize the RSI strategy when the RSI is below 20, and the Bollinger Band strategy when the price touches the lower Bollinger Band. This combined approach aims to maximize profit while mitigating risk in the current downtrend. Based on the historical data and forecast, Cardano exhibits a downtrend with increased volatility. The recent RSI values consistently remain below 50, indicating a bearish momentum. The forecast prices for the next week further support this downward trajectory, particularly with readings dipping below $0.6. Considering the support price of $0.625 and the decreasing trend, I propose a short selling strategy. Entry price will be $0.654, with a stop loss set at $0.678, just above the recent Bollinger Band's bottom. The initial target price is $0.588, aligning with the forecast price for October 22, 2025. To refine this strategy, we'll incorporate Bollinger Bands for dynamic adjustments. If the price touches the bottom Bollinger Band, it suggests potential exhaustion of the downtrend, prompting a reassessment of the position. If the price reaches the target of $0.588, consider taking partial profits and trailing the stop loss to protect gains. If the price fails to reach the target and bounces back towards the support level of $0.625, we will close the position to minimize losses. The combination of RSI confirmation, forecast data, and Bollinger Bands provides a robust framework for managing risk and maximizing potential returns in this volatile market. Based on the historical data and forecast, Wrapped Beacon ETH has shown significant volatility. The price has been fluctuating between the support price of $4,130 and the resistance price of $4,330. The RSI indicates that the asset is currently in a slightly oversold condition, with values ranging around 40. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential bounce. Therefore, I recommend a moderately bullish strategy. We will enter a long position when the price touches the support level of $4,130. Our stop loss will be set just below the support at $4,080 to mitigate potential losses if the price continues to decline. The initial target price will be the resistance level of $4,290, offering a reasonable profit margin. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. If the RSI starts to rise from the oversold zone and the price bounces off the lower Bollinger Band, it would confirm the bullish signal. In this case, we can consider moving the target price to $4,370, aligning with the forecast. However, if the price breaks below the $4,080 stop loss, we should immediately exit the position to prevent further losses. This combined strategy, utilizing both price levels and technical indicators, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Chainlink shows a clear downtrend. The price has been consistently declining from October 6, 2025, to October 19, 2025, and the forecast for October 20, 2025, to October 26, 2025, projects further decline. The RSI consistently remains below 50, indicating a bearish momentum, with values frequently dipping below 30, suggesting oversold conditions. The Bollinger Bands confirm this trend, with the price consistently trading near the lower band. Therefore, I recommend a short selling strategy. Entry price should be $17.6, stop loss price should be $18.5, and target price should be $14.7. To refine the strategy, let's incorporate the RSI and Bollinger Bands. When the RSI dips below 30, oversold, it signals a potential bounce, but in this downtrend, it's more likely a temporary pause before further decline. The Bollinger Bands indicate that the price is currently near the lower band, suggesting a potential for a brief upward correction before resuming the downtrend. Considering these factors, I suggest a short position with an entry price of $16.7. Set a stop loss at $17.5 to protect against a potential short-term bounce. The target price should be $14.7, aiming to capitalize on the overall downtrend. This combined strategy leverages both technical indicators for a more informed and potentially profitable trade. Based on the historical data and forecast, Starknet has been exhibiting a downtrend with significant volatility. The price has consistently tested the $0.11 support level, and the RSI has frequently dipped into oversold territory below 40, suggesting potential buying opportunities. The Bollinger Bands indicate periods of high and low volatility, with the price often fluctuating between the upper and lower bands. Looking ahead, the forecast suggests continued downward pressure, with prices hovering around the $0.11 to $0.12 range. Therefore, I recommend a contrarian strategy focusing on short-term bounces within this downtrend, combined with a strong risk management approach. My proposed strategy involves a long position when the RSI falls below 40 and the price touches the $0.11 support level. For example, if the RSI reaches 39.7 on October 19, 2025, and the price is at $0.11, enter a long position at $0.111. Set a stop loss just below the support level at $0.109 to limit potential losses. The initial target price would be the center of the Bollinger Bands, which was $0.138 on October 19, 2025, aiming for a profit of $0.027. If the price reaches the target, consider taking partial profits and moving the stop loss to break even. If the price continues to fall as forecasted, exit the position at the $0.107 level, as indicated by the forecast for October 24, 2025. This strategy balances potential upside with robust risk management, capitalizing on short-term rebounds while safeguarding against further declines. Based on the historical data and forecast, Ethena has been in a downtrend, showing significant volatility. The RSI consistently dips below 50, frequently entering oversold territory below 30, suggesting a potential for a bounce. The Bollinger Bands have been widening, indicating increased price fluctuations. The support price remains steady at $0.403, while the resistance fluctuates, with a recent high of $0.545. Considering the forecast for the next week, the price is expected to hover around $0.436, with slight variations. Our strategy will be a combination of RSI and Bollinger Bands, with a focus on capitalizing on potential rebounds from the support level. We will implement a long position strategy when the RSI reaches an oversold level of 20 or below. Specifically, when the RSI is 25.9 on October 12, 2025, we will enter a long position at $0.369. The stop loss will be set just below the support level at $0.38 to mitigate potential losses if the price continues to decline. The initial target price will be the recent resistance level of $0.471, aiming for a profit of $0.098. If the price reaches $0.471, we will then adjust the stop loss to break even at $0.369 and set a second target price at $0.545, the previous resistance. This combined strategy leverages both technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Near Protocol has been in a downtrend, consistently testing the support price of $2.15. The RSI has been predominantly below 50, indicating bearish momentum, with several days in oversold territory below 35. The Bollinger Bands are narrowing, suggesting decreasing volatility, but the price has consistently been near the lower band, reinforcing the downtrend. The forecast for the next week projects continued downward pressure, with prices fluctuating between $2.07 and $2.33. Therefore, I recommend a short position strategy. We will enter a short position at $2.33, placing a stop-loss order at $2.38 to protect against a potential upward reversal. The initial target price will be $2.1, aiming to capitalize on the ongoing downtrend. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI reaches an oversold level below 20, we will consider covering our short position partially to secure profits. Conversely, if the price touches the bottom of the Bollinger Bands and the RSI is below 30, it could be a good entry point for a short position. If the price breaks above the upper Bollinger Band, it signals a potential trend reversal, and we will exit all short positions and consider a long position. For the current short position, if the price reaches $2.1, we will move our stop loss to the entry price of $2.33 to lock in profits. The final target price will be $2.07, taking into account the forecast data. Based on the historical data and forecast, Raydium is exhibiting a clear downtrend. The price has consistently tested the support level of $1.73 and failed to break through the resistance of $2.61. The RSI consistently remains below 50, frequently dipping into oversold territory below 30, suggesting significant selling pressure. The Bollinger Bands are narrowing, indicating decreasing volatility, and the forecast predicts further decline. Therefore, I recommend a short selling strategy. Enter a short position at $1.86. Set a stop-loss order at $1.95 to protect against unexpected upward movements. The initial target price is $1.56, aligning with the forecast and the lower Bollinger Band. To maximize returns, we'll implement a tiered target strategy. After reaching $1.56, move the stop-loss to the entry price of $1.86 to lock in profits. If the price continues to decline, set a second target price at $1.39, the lower Bollinger Band from October 19, 2025. This strategy combines the momentum of the downtrend, the oversold RSI readings, and the support of the lower Bollinger Band to achieve high returns while mitigating risk through strategic stop-loss placements. This approach allows us to capitalize on the predicted downward movement while protecting our capital. Based on the historical data and forecast, Curve DAO exhibits a downtrend, particularly noticeable from October 6 to October 19, 2025. The RSI consistently hovers below 50, with periods of oversold conditions below 30, indicating potential buying opportunities. The Bollinger Bands show that the price has been oscillating within the bands, suggesting increased volatility. Considering the forecast for the next week, the price is expected to remain in the 0.489 to 0.556 range. Therefore, I recommend a moderately conservative strategy focused on capitalizing on short-term bounces while mitigating downside risk. My proposed strategy involves a combination of RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below 30, indicating an oversold condition. Specifically, we will enter a long position at $0.489, placing a stop-loss order at $0.48 to limit potential losses. The initial target price will be $0.528, aiming to capture a quick profit from the anticipated bounce. If the price reaches $0.528, we will then move the stop-loss to the entry price $0.489 to secure the profit. This strategy balances the potential for gains with a defined risk management framework. Based on the historical data and forecast, Virtual's protocol shows a downtrend, particularly evident in the recent price action and the forecast for the next week. The RSI consistently dips below 50, indicating weakening momentum, and has even entered oversold territory, below 30, multiple times. The forecast predicts further declines, suggesting a continued bearish outlook. Considering this, I recommend a short selling strategy. We will enter a short position at $0.791. The stop-loss will be set at $0.87, just above the recent high and outside the upper Bollinger Band, to limit potential losses if the price unexpectedly reverses. Our target price will be $0.684, aligning with the forecast and providing a reasonable profit margin. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition, which could be a good entry point for a short position. However, given the overall downtrend, we'll prioritize the short position at $0.791. If the price bounces and approaches the middle band, we'll reevaluate. If the price breaks below the support level of $0.742, we'll tighten the stop loss to $0.75. This combined approach, blending the RSI and Bollinger Bands with the forecast, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Zcash shows a strong upward trend with recent volatility. The price has consistently tested the resistance level of $249, and the forecast indicates a continued upward trajectory, reaching $283 by October 26, 2025. The RSI consistently exceeds 70, nearing the overbought level of 80, suggesting a potential pullback but not necessarily a trend reversal. The Bollinger Bands have widened, indicating increased volatility, with the price frequently touching the upper band, confirming the bullish momentum. Therefore, I recommend a long position strategy, capitalizing on the anticipated price increase. My recommended strategy is to enter a long position at $250 on October 20, 2025. Given the strong upward trend and the potential for a pullback, I suggest a stop-loss order at $235 to mitigate potential losses. The initial target price should be $260, aligning with the forecast and the upper Bollinger Band. If the price reaches $260, consider moving the stop-loss to the entry price of $250 to protect profits. For a more aggressive target, if the price continues to rise, a final target price of $283 can be set, aligning with the forecast's peak. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Bittensor demonstrates a volatile trend with periods of both upward and downward movement. The recent price action shows a recovery from a low of $295 to a high of $458, suggesting a potential bullish momentum. The forecast for the next week indicates a continuation of this upward trend, with prices expected to hover around $428 to $449. Considering the RSI values, which have fluctuated between 40.6 and 72.2, the asset is neither consistently oversold nor overbought. The Bollinger Bands also show increased volatility, with the price frequently touching or crossing the upper band, indicating strong buying pressure. Therefore, I recommend a long position strategy. The entry price for this long position should be $423, coinciding with a slight pullback in the forecast. A stop-loss should be set at $411, just below the recent support level and below the bottom of the Bollinger Bands to mitigate potential losses. The initial target price is $449, aligning with the upper end of the forecast range and the top of the Bollinger Bands. If the price reaches this target, we can consider a trailing stop-loss at $438 to secure profits and potentially capture further gains if the upward trend continues. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Artificial Superintelligence Alliance shows a strong downtrend. The price has been consistently declining since October 6, 2025, and the forecast for the next week indicates further downward pressure. The RSI consistently remains below 30, indicating an oversold condition. Considering the support price of $0.261 and the forecast price of $0.286 on October 20, 2025, I recommend a short position with an entry price of $0.286. Place a stop-loss order at $0.291, just above the recent resistance level, to limit potential losses if the price reverses. Set a target price of $0.218, aligning with the forecast price and providing a reasonable profit margin. To refine the strategy, integrate the Bollinger Bands. The price is currently trading near the lower band, reinforcing the downtrend. This confluence of indicators strengthens the short position. The RSI suggests the asset is oversold, but given the consistent downward trend, a short position remains favorable. The combined strategy involves entering a short position at $0.286, setting a stop-loss at $0.291, and targeting a profit at $0.218. This portfolio combines the trend analysis, RSI signals, and Bollinger Bands confirmation for an optimized high-return investment strategy. Based on the historical data and forecast, Synthetix shows a generally upward trend with significant volatility. The RSI fluctuates between 47.1 and 78.9, indicating periods of both oversold and overbought conditions. The Bollinger Bands also reflect this volatility, with prices frequently touching or exceeding the upper and lower bands. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimized returns. We will initiate a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, aiming to capitalize on potential rebounds. Specifically, on October 26, 2025, with a forecast price of $1.59, the RSI is expected to be below 50 and the price near the lower Bollinger Band. Therefore, enter a long position at $1.46, setting a stop loss at $1.37, near the support level. The initial target price will be $1.71, aligning with the forecast for October 20, 2025. If the price continues to rise, we can adjust the target price to $2.03, the recent resistance level. This strategy combines technical indicators and forecast data to maximize profit while minimizing risk.